Welcome back. You're watching Startup Street. Now, employee commute platform MoveInSync recently announced a $15 million fundraise in a Series C round from Bessemer Venture Partners and others, and the company is going to deploy this towards the growth of MoveInSync One, which is a commute innovation which encompasses fleet operations and technology and empowers enterprises to offer cost-effective and seamless commute for their employees. So joining me now to tell us more about this on the hot seat today is Deepesh Agarwal, the co-founder and CEO of MoveInSync. Deepesh, welcome to Startup Street. Thanks very much for being here. Briefly tell our viewers what your companies within the MoveInSync company, of course, are about and how you operate.
So, Ritu, MoveInSync's business is employee commute. We get employees safely from their home to office and back. The two products are just two product lines. One is a software product and the other is where we do the fleet management. But it has got everything to do with employee commute. That's what MoveInSync stands for.
You know, this $15 million that you recently raised up, could you give us a sense of what your plans are to deploy these funds?
Sure. I think first that we are a profitable company. So obviously we had an internal deliberation that should we be doing the capital raise. But I think capital does give you advantages. And I think there are two main agendas which we have as the company. One is to increase the MoveInSync growth in India. So I think in India, we are very deeply entrenched or focused into the IT BPO tech segment. We also want to increase it to manufacturing segment, which is growing in India. And what happens is because of the use of safe commute, the women participation in the workforce increases. So I think that's one place in which we want to invest in. The second which we want to invest in India is in our fleet management business, especially focused on the use of electric vehicles. I think something which the corporate India and as well as the government initiatives are very strong about. So those are the two use of funds in India. And apart from that, Ritu, we also plan to expand outside of India. We do have presence in market which are similar to India, like Philippines, South Africa, and we are also expanding to the Middle East market. So that's broadly the use of funds to grow the business.
You know, since you spoke about electric vehicles penetration in India, you know, to what extent have your rides transitioned, for instance, and do you have a target to get to a certain percentage of EV rides in the next few years?
Sure, Ritu. So I think you'll be first very surprised if you take a guess at where the electric penetration of corporate India is. And this is really like the top-notch, best of the class companies which operate in India. I think the electric vehicle penetration of corporate India is very low. It's sub 5%. So that's a very low number. In our fleet management business, we've been able to increase it. And right now we are at 15%, which is at least 3 times the industry's average. While some of our customers have been able, at least one client has been able to get it to 100%. So I think in the next few quarters, we expect that this year, FY25, we'll be able to take the electric vehicle penetration to 25% with solutions around infrastructure and hopefully more electric vehicles coming in the fleet business, the corporate segment business.
Okay, you're saying that part of the fundraise will also go towards expanding your international presence in markets like Philippines and Middle East, etc. Just tell us what the growth potential you see in these markets versus, say, the home country, India.
So I think home country is obviously it's our home ground. We've developed the solution here and it is used by 5 lakh employees every day to safely go from home to office and back. So sort of that will remain our focus. As of now, I would say just probably close to 10% of our revenues are from outside of India. So certainly it's a small percentage in terms of the percent. But I think what is very interesting is in some of the markets like Philippines, which were presently not operating like India, where the companies were not providing transport. I think to get their employees returned to office, very similar to what happened in India. I think companies in Philippines are also now interested to offer this as an incentive to get the employees back. So we do see a good penetration in Philippines happening. And in the Middle East market, which we recently entered, I think large labor workforce gets transferred from one place to the other for various constructions and for the other purposes. So I think this year we will see maybe that 10% probably as the company grows, we'll get to 15 to 20%. But that's pretty much where our focus a large part of our focus will remain in India as it continues to.
Let me ask you before we let you go, are you looking to tap the public markets anytime soon? Is an IPO something that's on the cards?
Yeah, I think we're keeping our fingers crossed. I think we are a little, maybe I think we can have a good conversation maybe the next financial year. But we do certainly see that once we get over 1,000 to 1,500 crore mark, I think that would be a good time to think of it. Given the state of the equity markets, etc., and I think the way the company is structured in terms of best, great companies, profitable company, I think it will be good to have an option to have it listed as well. But I think we are probably one financial year earlier for this conversation.
Sandeep, thanks very much for joining us. Thank you very much. It was a pleasure speaking with you. On that note, we're going to wrap up this edition of Startup Street. Thanks very much for watching, but stay with CNBC TV18. More news and updates will continue on the other side.